Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning and welcome to the IRS Solution Attorney Show. I am the IRS Solution Attorney.
It's him. It's Darrin, and this is your co-host, Katrina Madewell. Nice job, Pat. You totally... No, he's always messing
She turns
with
the
me.
mic on a half hour early and then turns it
Normally-
off when she's supposed to talk.
Well, you turned it on, and then you popped it back off. And normally I pay attention, and I didn't hear myself. Messing with the volume. So good morning. This is the IRS Solution Attorney Show.
So I'm sitting right next to her and I can hear what she's saying despite my headphones are on, but I don't hear her over the air. So I'm like looking at her like, something's not working quite right.
And it's pretty bad. Like, we're streaming live on Facebook, so we've got these big headphones on. So theoretically, with these on, you shouldn't be able to hear anything. But what Darrin just said is he can hear me through his headphones, even without going to the mic.
Well, you talk loud, so.
I do.
I think I might have just called you a loudmouth. Not quite sure.
Sort of, yeah. I think my husband would concur with that.
Where are you, Darrin? I can't see you today. She's got all kinds of screens in here.
Yeah, so typically I can see Pat George right through the window. He's in a small padded rubber room on the other side of the studio.
I'm strapped.
But today we're Facebook Live streaming, so there's a giant iPad, an iPad Pro between he and I. And so when he pulls his dirty tricks on me, I'm not going to be able to see his reaction. I'll just have to...
Only Katrina can see what's coming.
There's this narrow little head-shaped window where I can see Pat through a microphone.
But I can see a clock, which is really helpful.
Yes.
So that I know how long to talk or not.
I don't even know if that's in this studio or another studio, but we can see it.
I think that's in a different radio station studio altogether.
That's in a different zip code.
Oh, okay.
It might even be a different format, not quite sure. There's a lot of formats in this building.
It's morning radio.
Oh, well.
Music.
Okay, music. Yeah. Let's not do that. I'm not good at that.
So our topic for today's show, because we talk about a lot of stuff other than farm animals, obviously, and tax stuff, is tax tips that you actually might have missed.
So,
still right on time.
Do you want an update on the farm animal situation?
Yes, let's hear, because if you missed last week's show, you know that Darrin's children both had hogs that were entered in the Pasco County Fair.
In the Pasco County Fair in Dade City, Florida.
And
we spent the whole first segment last week talking about the hogs and the contest and going to auction and all that kind of stuff. And it went really well. The kids had a great time. They learned a lot. They understand, and they have always understood, or at least for the last 3 years they've been doing this, they understand that a farm animal's job is to do its job, which is to feed us. And they did well in the auction, and it was another good experience, I'd say.
That's good.
There was a little bit of adversity, and I think that's good for kids to face adversity. You know, it's in today's day and age, all of us parents, maybe I can't speak for you, but all of us parents, our gut instinct is, and when there's some adversity that our kid faces, is to just go fix it.
Yeah, try to make it perfect.
And the problem with that is we're not creating capable adults. You know, we're not letting them work through that adversity. Exactly. And so...
so what did you experience? What was the adversity?
Well, the judge... See, there's a judge that grades all the hogs in the contest, okay? And the judge is just one person with one person's opinion. And this particular judge didn't like the body conformation of our hogs. He didn't like how they were built.
There's only one judge?
There's only one judge.
Okay.
And he has to judge, 135 hogs or whatever it was. And the judge didn't really like our hogs, just the way they came out. He didn't like them very much. And so the kids were kind of disappointed about that. And I don't blame them. I was a little bit disappointed as well because I didn't agree with them, obviously. I was the parent, right? So... But when I was talking to them, it was more about how they handled the adversity. It was more important that they didn't do well in the contest. Mm-hmm. I think we all run into situations in our lives where we have some big thing that we're preparing for, and it doesn't turn out well. And I think what separates, winners from losers, true winners from losers, is how we deal with that adversity. You can either be better about it and pout, or you can just resolve to do better. Those are really, in my mind, the only two choices. So that they ran into some adversity, and they powered through it. They worked through it. I think there were some long faces and whatnot for a few hours. But ultimately, when it came down to the auction, which is where, the rubber meets the road, they did well. And so they were happy. They made a profit. And I just think 4-H is really neat because it teaches them so much. It teaches them about business and integrity and values and things like that.
It's so interesting if you look at history and time and some of the people in history that have really just made an impact. Many of them have either it was a second career or they did it late in life. Like, for example, the light bulbs, like Thomas Edison. He was very old when he came up with electricity.
He's very old now.
Or the Kentucky Colonel.
Yes, another fine example.
I think he was like 65 or 70 when he discovered the fried chicken.
He started it because Social Security was not enough to live on. Imagine that.
And he needed to pay his taxes. Hey, the most important thing about the Dade City Fair, did you have any elephant ears? Did you eat any of the fair food?
I didn't. I had a couple things that were just not good. And
because everything's fried from pickles to Oreos.
I had a couple things that just were not good, and I swore off fair food. We were there for the better part of 3 days, so I mean, no, I did not eat an elephant ear. Although I think the family did.
So, do you know who bought the pigs?
Swan's Feed Mill bought one. Swan's Feed Mill on Fort King Road in Zephyr Hills, and the other one was like a 3-letter acronym. Who knows what it is? What it stands for? It was like BRW.
Okay.
Who knows? But we're appreciative. I don't think our signal really gets up that far, but we're appreciative that they bought it, and it was a really good experience, and we had a good time.
Awesome. It's pretty far, though. Like, we go from, like, Port Richey to Sarasota all the way into Orlando.
Yeah, well, it doesn't...
Depends on what you're listening to.
Yeah, that's true, because we have an FM signal that penetrates up there, we think.
103.1, right?
103.1.
And another one coming soon?
92.1 soon, and, of course, Money Talk 1010.
Sweet. And HD radio, we're still there. 99.5 HD2.
There's like 4 different ways to get to hear what we're saying right now.
Oh, more than 4. We're Facebooking, we're streaming.
And if you hold your microphone, if you have a CV up to the speaker, take the CB and you can broadcast it everywhere.
Speaking of CBs, do people even have CBs anymore?
Oh,
truckers.
Yeah.
Truckers, right?
Got to say hi to our truckers out there that are listening. Breaker 19.
Yes.
We'll catch you on a flip-flop.
They get sick of listening to the same song like every hour, so I'm sure they listen to a lot of talk radio.
That's true. When I drive cross country once a year. I listen to a lot of talk. I primarily listen to talk anyway because it keeps me awake, keeps my brain engaged. If you hear the same 50 country songs or same 50 pop songs, it just lulls you to sleep. If you're driving for hours and hours and hours. I will sometimes listen to talk radio that kind of irritates me because
hopefully that is not us this morning.
Hopefully it's not. So anyway, the topic for today's show is not farm animals or the Pasco County Fair. It's tax tips that you may have missed since we're getting, we're in filing season and people should be thinking about filing their tax returns. So
let's talk about who the filers are right now, right? Because it's now officially into March.
Oh, yeah.
And
I was thinking it was February, but you're right. It's March.
Would you say that it's safe to say that our wage earners have already filed to get their refunds and the ones that are still basically poking along into March are the ones that either have to write a check or self-employed?
Probably. Most wage earners who are entitled to refunds or expecting refunds are going to file early in the process because they want their money, right? And so that means almost none of my clients have filed yet because most of them are not
expecting refunds. They have to not pay their taxes for at least 4 or 5 years.
In order to become a good client of mine anyway. So I would say, it's probably more people that are expecting to owe, or there's always procrastinators in any field of endeavor. There's just people who just drag their feet, not that interested. And there's a lot of people who are entitled to refunds that just don't file on time because they know the rule is that there's no penalty if you have a refund coming for late filing.
Right.
Ultimately, the penalty is that, if you file more than 3 years late and you had a refund coming, this is kind of the ultimate penalty, right? You don't get your refund. It kind of stinks. Ugh. But,
I can't even imagine how that would happen. But
since penalties,
procrastination.
Yeah, since penalties are calculated based on tax due, if you have no tax due, then there's not really a significant penalty. Still a good idea to file, but routinely people come in and they haven't filed for 10 or more years, and we get down to brass tacks and we're talking. It's like, yeah, I have a job and I have taxes withheld, and I'm scratching my head now. Why exactly did you not file your tax returns? A lot of times the answer is, well, there was some life event that intervened, and then they just kind of got off track. But the other thing that I hear from time to time is, I don't want to be in the system, which makes me kind of scoff. It's like, well, if you're getting a W-2, you're in the system. Whether you may or may not be participating at a level that you're happy with, but you're in the system.
I don't know how anybody could not be in the system. It's almost like not having an online presence. Like, even if you don't want one, you probably have one.
Well, if you're a self-employed person that, works for cash, you don't report the cash and you don't file tax returns, and you're not really in the system. I mean, the government knows, in theory, what your Social Security number is, but they don't know anything else about you, really.
And frankly, they don't have the manpower to track all that down, right?
Not for the most part. I'm not advocating that.
No. Certainly, neither of us were advocating that. Let's be very clear on that. I'm just saying, generally speaking, the IRS has a lot of other things to do. They're likely not going to be tracking down the one guy that's not filing his cash. I mean, it's possible.
They have a big job, and they don't have the resources to do that job as well as they could. And that's one of the reasons why we always complain about, or at least I always complain about, the level of service at the Internal Revenue Service. And I think part of the problem is that they just don't have enough people, or they don't have enough motivated people.
Right.
Perhaps.
All right, so when we come back, we're going to dive right into these tax tips that you might have missed so that you'll be right on time for your filing and you don't miss a beat when you file this year's return. Hope to save you a couple bucks. You're listening to the IRS Solution Attorney Show. Stick around. We'll be back in just a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, the one and only
Darrin Mish. And I'm your co-host, Katrina Madewell. Thanks for sticking with us through the break. And as promised, we're going to get into those tax tips that you might have missed on some of the prior shows. We're right into March. We want to make sure we give you some good value for the show and that you hopefully walk away with a couple things to save you a few dollars on your taxes.
Absolutely. So today, the first thing we're going to talk about is, it's just really important that you get a copy of your prior year tax information from the IRS. You don't have to get a copy of the information from the IRS, but your preparer should at least have a copy of last year's tax return before this year's tax return is prepared.
Now, why do they do that?
Well,
why is it so important?
The reason it's a good idea is there can be lots of clues on the tax return about things that need to continue in the future. I'll tell you a short story. I had a client who was actually divorced, and he was entitled to claim two of his children on his tax returns, but he didn't know the kids' Social Security numbers. The kids wouldn't tell him what the Social Security numbers were, and the ex-wife certainly was not going to tell him what the Social Security numbers were. And so we actually had to reach back to the IRS, and we requested a copy of the last tax return that he had filed that we knew the kids were on. And we did that just so we could get the kids' Social Security numbers, because it made a huge difference in the outcome of the case. And so we ended up requesting a copy of like a 2008 or 2009 tax return. Reach way back
when they were married,
past.
probably.
They were married, and the kids were on there. The kids were much younger at that point in time, obviously. And we were able to get the Social Security numbers. So that's an example of why you need the prior year's returns. I actually have to look up my kids' Social Security numbers every single time.
I don't know mine either.
And assuming they were right on last year's return, they're going to be right on this year's return. There's another sort of instance where that might make sense is, let's say you lost a lot of money in the stock market, like a lot of people did back in around, what was it, 07, 08, 09, something like that.
Yeah, after the housing market collapsed, which, the peak was December of 06, and we started dropping in January of 07.
So, you lost a lot of money in the stock market and you have these huge losses. Well, you can only carry those losses forward at $3,000,
a certain amount.
A year.
Is it indefinitely?
It's indefinite until
as far as the amount.
Until you use up the loss.
Right. That's what I meant. Like, there's not a cap of 5 or 10 years.
No, I have seen actually taxpayers who have, $1 million. They're 70
carrying that forever.
They're 70 years old and they got $1 million capital loss. Okay, well, that's going to take a while. But that would be another example of why you want to get have a copy of your last year's return. But
plus, you don't want any big swings, right? Like, if you're writing a certain, like, if you look at last year's returns and like in my case, I'm going to always have a lot of mileage, but I'll have certain advertising and other expenses. You don't want big swings or changes from one year to the next either, right?
I mean, that's a really good point. If you're talking about a Schedule C, which is what a sole proprietor uses, it's the least sophisticated kind of business, schedule or organization, really. If you're looking at your Schedule C and the tax preparer sees some huge number just pop out, especially relative to your overall gross, then he's going to want to ask a question about that, because a lot of the audits that I deal with, well, actually in every audit that I deal with or even consult with, I try to look at the return and determine why exactly, this return was audited, because it helps us as preparers know not to do that. Whatever that was, don't do that.
Right.
And in almost every return, I can look at it beforehand and I can see what the problem is. I mean, I can literally eyeball it and say, yep, if I was the IRS, I'd want to know why that number is so high.
Have we done a show on things that can get you audited? Have
No,
we done
but we
that?
really should do that
You
show.
should keep a running log
Yeah.
at your desk, like when you see stuff of things that trigger an audit, and then we can do a whole show on that.
Yeah, we should do a show on how to prevent an audit and then what to do if you do get audited, right? And things like that. That sounds really good. But so let's talk about the fact that most taxpayers can't produce a copy of last year's tax return, which I think is really kind of a sad thing. They absolutely cannot produce last year's tax return. So I would say the better thing to do would be, obviously have a file cabinet or someplace for important papers and have a copy of all your tax returns. And I would say people always ask, well, how long do I need to keep that information? Simple answer, really. Forever. Like, what's the big deal? It's like some paper, You really should have your tax returns going back, like, for as long as forever, if you can.
Really?
And especially
that's a long time at some point. Like, you're going to keep tax returns from 20 years ago? The IRS doesn't even ask for that, do they?
Especially in today's age where, digital storage is like either free or really, really cheap. Just scan the thing and put it up in the cloud someplace. Obviously someplace secure. But
Yes.
put it someplace and then just don't worry about it. That I went through a mortgage process in 2016, and it took a long time because I'm self-employed and whatnot. And I swear they asked me for the same papers.
They do.
Over and
Yep,
over
they
and
do.
over. But because of the way I had my stuff organized, it was literally, they'd say, we need your 2014 tax return again. I'm like, yeah, okay,
Now.
whatever. Click,
And we
done.
need it now.
Click, done. That's how I did it. Whereas most people, if they were disorganized, it would have just been the worst experience ever in their life because they just can't get it together, right? Or they have it on paper format only, and so they got to go to the fax
Scan it
machine and
or
all that
fax
stuff.
it.
Yeah. So my policy was I scanned the documents one time, put it up in Dropbox is what I was using.
And then you still hang on to your originals or no?
I do, but it's only because of the business that I'm in.
Okay.
I don't think you necessarily need to keep your originals. And by the way, you don't need to keep your original receipts either. A photocopy or a scan is perfectly acceptable.
I love Shoebox. It's so my friend. Like, I should be paid for an endorsement because I think every time we talk about receipts, I talk about Shoebox.
So let's talk about what shoebox.com is real quick. Shoebox.com, I use it too.
It's a blue magic envelope.
Yeah,
That's what it is.
It's a service where they basically scan your receipts and put them in, basically put them into a spreadsheet so that you can get them into your, your accounting program or whatever.
Did you know that company was started by a 15-year-old kid?
Doesn't surprise me. I mean, 15-year-old kids
Isn't that
nowadays, they're
amazing?
pretty smart. I wonder what he sold it for.
I think he still has it. I don't know. I'll find out. We'll see if we can get him on as a guest. I think it's a great idea.
So let's talk about real quick what to do with, or how to get a copy of your tax return from the IRS. I mean, probably.
So Shoebox, we didn't finish talking about Shoebox.
Okay.
So basically, you stick all these paper receipts in a blue envelope, and then you mail it off, and they digitize and scan and everything, and it's all searchable.
Yeah, I got a copy. I got mine back yesterday for my, my second batch for this year. And what's funny is I cram the receipts in there, and they're all different
Mangled.
directions and
and
stuff.
one time,
and they come back and they come back perfectly rectangular.
Oh, you get them back? Oh no, I don't get them back.
Yeah,
I don't want them back.
They send them back to me. It's for it doesn't cost anything extra.
Or you can have them go bye forever, which
or
is
they
my
can
case.
just destroy it and turn it into new paper or
So
whatever.
listen to this. One time, I don't even know how this happened because only receipts are in there, but my kids and my husband, everybody puts everything in the receipt bin, right? So they literally sent me back an envelope and they said, sorry, we don't scan cash. There had been cash in there and they mailed it back. They mailed it back, honestly. And I thought, wow, that's pretty great. It's pretty honest. And if you've ever put checks or whatever in there too, they block off the bottom of the checks. Did you know that? Did you notice?
I didn't notice,
They do.
but that's good.
They do. They block off the bottom of the check.
That's good for sure. I don't think I've ever sent them a check.
I've had like copies of like, because we scan in our, the gross checks or wires or whatever, and they block all that out.
Okay, gotcha. So
Pretty cool.
you send them deposit information.
Yeah, deposit information, but a lot of times there's a copy of that escrow check in there,
Okay.
and they block off the account number at the bottom, which I thought was super cool.
Yeah, that is cool. It's pretty secure.
So the next one, I think the second tip on our list, a lot of people might miss, and I think that's probably because it changes pretty significantly from one year to the next, right? Like different bills expire, but it's getting credit for making your home energy efficient.
Yeah, when I was doing the research for the show, I was, this was kind of eye-popping. It's like, wow, basically you can get a credit that's worth up to 10% of the cost of certain qualified energy-saving items added to a taxpayer's main home in the past year. So an example of some qualified improvements would include adding insulation, energy-efficient exterior windows and doors, and certain roofs. Do not include the cost to install these items, though. So it'd be the cost of the materials, I suppose. And one of the
it's only a percentage, right? Not all of it.
It's not. It's only 10%. But one of the things that kind of popped in my head when they were talking about energy-efficient roofs were these new roof tiles that Tesla is coming out with. That are going to be a combination of obviously roofing material, but also solar panels.
Oh, I didn't know that. That's so going to be a topic on my show.
And they're asserting that it's actually less expensive than conventional roofing materials, which is amazing. So we'll see. I mean, Tesla in my opinion, has a history of making these big announcements, like the whole house battery. This is coming soon, and we're still waiting. A couple of years later.
If they partnered with a company like Google that's really good at implementation.
Yeah, that'd be pretty neat.
Oh my gosh, they'd have the market because the technology is amazing.
So the other part of the credit in this, this credit for making your home energy efficient is not a percentage of the costs, but it does include the installation costs of certain high efficiency heating and air conditioning systems, which would be really, a big deal down here in Florida, the AC systems, high efficiency water heaters and stoves that burn biomass fuel. It's kind of cool. That'd be like wood and stuff like that.
Interesting.
And the credit amounts for each of these things has different dollar limits. It's too complicated to talk about.
And
on
they
the radio.
change all the time.
Yeah,
correct?
Every year practically. But the maximum lifetime limit of this home, this home energy efficient thing is only $500.
What do you mean the maximum lifetime limit ever? Like on your house?
That's the maximum you can get is
Seriously?
$500.
All right, that doesn't.
It's not that exciting. And once you learn that, it's like, oh. Okay, well.
I know, because if you think about adding insulation and new windows, and I mean, those are major improvements.
But on the other hand, if we're going to put insulation in anyway to save on your energy bills, then it's nice to know that you get a 10% credit for that.
Makes sense to me. All right, this is the IRS Solution Attorney Show. Stick around. We'll be back in just a second.
I was blind, but you were always on my mind.
Sing it, Willie.
You were always on.
I'm playing that for two reasons. If you have IRS problems, this is always going to be on your mind.
Maybe
And also, Willie's going to be at the Strawberry Festival tomorrow night. How about that?
That was a great segue. It's always on your mind.
Almost gotcha.
I like that.
I was just listening to that song the other day. That's one of the cool things about Apple Music is if you're like, hey, I want to listen to that song. You just put it in the phone, and before you know it, you're listening to it.
So if you're listening to the show, I promise it's not nearly as entertaining as watching the show. Because
how right you are.
You would have seen Darrin with his little heart-shaped spiral glasses.
So we're on Facebook Live, just for those of you who just got in the car, and we're on Facebook Live. We're doing a live stream. And one of the effects that you can do is you can actually superimpose, cartoon hats and sunglasses and stuff on whoever's on the screen.
What is that thing?
And yeah, I'm not even sure why that exists, but it was sure a lot of fun during the break because I ended up with like a, what do you call that? It's a headdress for like a
no,
dancer.
It's for 2 days ago for Mardi Gras.
Okay, there you go. It's a Mardi Gras headdress. Exactly. And sunglasses with hearts. Anyway.
Way too fun. It's just funny. We're waiting for the time to pass.
This is the IRS Solution Attorney radio show, in case you didn't know.
Yes, we are talking about tax tips and things that you likely missed from a prior show.
And so the third tip for today is, a lot of people don't get their W-2s or their 1099s for that matter. And it makes it really hard to file their tax returns. So in the first segment, we talked about, well, who's filing right now? Well, obviously, the people that are filing are people who are expecting refunds because they want their money. but also it's people who have all their documents. And there are, it's a significant number of people out there who don't have their W-2s or 1099s. In fact, I have a staff member who actually had a 1099 coming from a state agency and hasn't gotten it. And so she can't file her tax return. And so it's kind of a problem. So I thought I'd talk for a few minutes about what to do if you don't get your W-2s or 1099s. Taxpayers are supposed to get their W-2s by the end of January, but it doesn't always happen.
So what happens if you don't get it? Is the employer in any trouble?
Well, here's what I would say. If you haven't gotten your reforms by mid-February, then you need to contact the employer. And you should ask the employer or former employer. Here's a big surprise. The problem usually comes into play with a former employer, right? Because what's the motivation of that employer to keep you happy anymore? But you ask them for a copy of the W-2 and make sure that the employer has the correct address. I mean, that can be a problem, obviously, is that if the employer doesn't have your correct address, it may not have gone to the right address, and the forwarding order might not exist or might be expired or whatever.
And where does it go exactly?
Well, it goes to your house or the address.
But I mean, if you've moved and they don't have the right address, it goes back to the employer?
Yeah, you would think it would go back to the employer, but...
So your tax information may be circulating somewhere around the post office. No worries.
So the other thing you can do if dealing with the employer is not working out for you, you can call the IRS. And if the taxpayer is not able to get a copy from their employer, they can call the IRS after February 27th. So that just passed. And the IRS will send a letter to the employer on the taxpayer's behalf. And the taxpayer, it'll be a letter from the IRS to the employer saying, hey, you need to issue a W-2 for this particular employee. And there are penalties for failure to file issue W-2s and 1099s. And there are every year. I deal with people every year who, didn't issue the W-2s, for example.
So what if somebody's just not ready when that April 15th deadline rolls around? Should they just file whatever anyway and then amend it later, or should they just do the extension? Is there no penalty?
The question is, what if the
taxpayers...
get a penalty
if you don't file, but if you do the extension, do you still get the penalty?
So the question, I think, is what happens if the taxpayer doesn't have all their documentation and April 15th is closing in? They're not ready. I would say for the most part, you're going to want to go ahead and get an extension because remember, if you're anticipating a refund, then there's no delay or there's no penalty rather for, filing the tax return even with the extension. Now, this is a common misconception is that people think that if you get an extension, you got an extension to pay your taxes. No, you didn't get an extension to pay your taxes. You got an extension to file the tax return. The due date of April 15th or in some years 16th or 17th, depending on if it falls on a weekend. But that due date for those taxes is the hard due date. So if you file even with an extension, if you owe tax, let's say you file on October 15th, which is the extension deadline, and you owe, $3,000, then there's going to be a penalty for the late payment of that tax. You're not going to get the late filing penalty, but you're going to get a payment.
So if they pay something, does it still penalize them? Or
so what you can do is you can actually
any little tricks?
Yeah, there are. You can actually send in a payment with your extension request. So let me give you a hypothetical.
Yeah. Let's say I owe $5,000.
Okay, you owe $5,000. Well, let me change that up a little bit.
I think I'm going to owe $5,000.
Let me change it up a little bit. Let's say last year you owed $5,000, and this year you've looked at all your paperwork and stuff, and you've only paid $3,000 in. So last year was pretty similar to this year. So I'm going to, taxpayer's going to owe about $2,000. Okay, but they don't have their stuff together, and they're not ready to file yet. So what do? Well, I would say send in $2,000 with the extension request. And that way you won't get the late payment penalty.
So no return, but send in $2,000.
Yeah, send in $2,000 along with your extension request. There's another way to do it too, but just do it that way. And that way you won't have the late payment penalty.
So what happens if it's all done? We figured all this out. We went through everything with the accountant, and now I actually owe $3,000 instead of $2,000. So there's $1,000 still due.
You'll only pay the late payment penalty on the $1,000. That's it. You won't have to pay it on the $3,000. And when we're talking about these little numbers, it doesn't matter that much. When you're talking numbers like $50,000, right, then
what is the penalty? Does that vary from one amount to the next?
Way to put me on the spot.
I'm sorry, I don't know.
It's the same percentage rate, and then
tax rate?
It's the same percentage of tax.
Okay.
But then it gets more severe the longer that goes on. It goes unpaid. So ultimately,
whether
you can
it's
top out.
$1,000 or $50,000, the penalty is the same.
Yeah.
It's not more because you owe more.
No, that's not. No, it's a percentage of how much you owe. So
no.
You're saying the percentage doesn't escalate.
Yeah, like your tax rate, how the more you make, the more they take. Like your tax rate climbs if you make more. I was just curious if that.
Yeah, the penalties are not graduated like our income tax system is graduated, which it shouldn't be, by the way, but that's just one
It shouldn't be, but a lot of things shouldn't be.
So, you can call the IRS to get a copy of the or to get them to send that letter, theoretically. If you can't get that stuff, then what you can do is you can actually use Form 4852, which is a substitute for a Form W-2, and you're going to have to estimate your wages and tax withheld as best as possible, which sounds kind of daunting, right? But it's really not. Just look at the year-to-date pay stub for that last pay stub in that year, and it's all on there, right? So you could just go ahead and use that and use Form 4852.
But most people don't even get pay stubs, right? They have to go physically get them from their employer, right? Isn't it all like digital? I don't think a lot of people get pay stubs anymore.
Well, I just gave you a crazy look. Like, what are you talking about,
I don't
lady?
think they do.
I actually think they do. In fact, my employees, including myself, we give them a piece of paper on payday.
You do, but you look what you do. You don't count.
Yeah, so
Pat, do you get a pay stub?
He'll be the tiebreaker.
I do, yes.
So if I asked you for your pay stub right now, you'd have the most recent one?
Yes, I would.
You get it physically with a check, or you get direct deposit?
I have direct deposit, but I still get the receipt. I still get a piece of paper, and I keep all of those.
I'm telling you, call in, because I know I'm not crazy, and let me know if you physically... Like, you get your paycheck, you get direct deposit, but you don't get a stub. Like, if you need your pay stubs, you have to go get them from your employer.
Well, self-employed people don't count,
888-404-1010. No, you're a wage earner. I'm just curious. Like, you work someplace, you're on your way to work right now. Let me know if you actually get a pay stub every week, or if you just do direct deposit and you show up at work and do your thing.
I get a pay stub.
888-404-1010.
I get a pay stub that says non-negotiable, and it's it's direct deposit, but what I get is a record. It looks like a paycheck.
And I talk to people about this, all day.
I'm telling my husband works for the city. I never see a pay stub ever.
There are people who have to log into like an employee portal and print it out. But awful lot of people that I talk to bring when I say I need to see the pay stub, they bring me a copy of a piece of paper that is their pay stub. Sometimes we're sitting in the conference room on our initial consultation and we need to see the pay stub, and they say, well, I didn't bring that with me, but I can log in. Let me have your computer. And they log right in.
Yes.
And we print it out.
But that's what I mean. Like, they don't physically have pay stubs. They don't print them. They don't get them. They don't keep them every week.
Okay. So we just wasted 5 minutes arguing about it.
No, I'm not arguing about it. I'm just saying. So we have some people chiming in on this, right? See, okay. I'm just saying. No, Darrin gave me this insane look. So I'm telling you, I'm not crazy. Hold on. Hello. Welcome to the IRS Solution Attorney Show. Who do we have?
Good morning. This is Brandon.
Hey, Brandon. So am I right, or is Darrin right?
Darrin's right. I do get direct deposit, and I do get a pay stub mailed to me.
So every week you physically get a pay stub?
Yep.
Brandon.
Every 2 weeks.
All right, Brandon. Thanks. We got another call holding. Let me see it. Let me see if I'm the winner. Chicken dinner number 2. Thanks for listening.
You've already lost. Oh well.
Hi, welcome to the show.
Yeah, Dan.
Hi, Dan. So do you physically get a pay stub, or do you have to go log in and print it?
No, I do not.
See?
It's Paylocity.
So I'm right.
So you have to log into the portal?
Unless somebody said, hey, I need your pay stubs, you'd probably never see it.
No, I never see it. I had to get with them a while back and have them send me 3 hard copies so I could present it.
Wow. So you don't get an email or anything?
No, I get it. I go on a Paylocity. I have to put in my the password, and then I can pull up my pay that way. But if I need a hard copy, I got to get with the company.
See there? Dan, I am betting that most people listening are exactly like you. It's 1-to-1. All right, we're looking for one more call because I think I'm right.
Dan, quick question.
All right, thank you. Okay, go ahead.
But you can log in, see your pay stub, and print it from there.
Of course.
Well, it's on my phone. I don't have it hooked up to my laptop, but yeah, I'm sure if I went on my laptop and linked to the wireless, my computer, my fax machine and copier, I can do it that way, but they don't send it to me.
But exactly.
Awesome.
So Dan, the point is, you go to work, you do your thing, it's direct deposit, but you don't physically see a pay stub unless you go get it, right?
That's exactly right.
Okay.
Or I log on to Paylocity.
All right, where's our third caller? Because I still think I'm right. Come on.
That's right. We need one more caller. We've got to break this tie.
All right, 888-404-1010. We want to know if you physically get a pay stub with your check every week, or if you get just direct deposit, and basically you have to go hunt down your pay stub if you need it. Thanks for calling, Dan. All right. I think I'm right. Let's see. We're going to get one more caller and break our tie. But I'm telling you, I think
it's a very important distinction, really.
But the
like 6 to 1, half a dozen to the other, right?
Yeah,
it's like the same.
But the point is, like, how did we end up talking about this?
Not exactly
I don't even remember.
Sure. So,
all right, so let's get to 6 tips for self-employed. We'll come back to this tiebreaker. 888-404-1010. I want to know if you get a pay stub.
So there's basically 2 different. Well, looks like we'll have to tackle this last one in the final segment of the show.
All right, so 6 tax tips for self-employed. Looks like we're skipping your train wreck this week, Darrin, because we have too much content still.
Well, we'll see. It's a good one.
All right, you're listening to the IRS Solution Attorney Show. When we come back, we promise you we're going to give you 6 tax tips for the self-employed person to help you out. We appreciate our callers. Thank you for listening. Thank you for chiming in, and we're still looking for a tiebreaker. Have a great morning. We'll be back in just a moment. Stick around.
I just can't wait to get on the road again. The life I love is making music with my friends. I can't wait to get on the road again. On the road again. Going places that I
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish. And apparently we're back on the road again.
We are. I'm your co-host, Katrina Madel. Thanks for joining us. And thanks for listening. We appreciate the prior 2 callers that chimed in on the great debate on the pay stub. Do you get one or not?
We had some people pipe up on Facebook Live that do get paper paycheck stubs. We had one who works for you who says she doesn't.
That.
And we had an employee here at the station who popped in who said that she gets a paper pay stub.
The same employer as Pat.
I am far in the lead at this point in time. The controversy was whether or not you get a paper, if you're a wage earner, you're an employee, if you get a paper pay stub or if you just get some online representation of such.
I remember what brought that, because we were saying if you didn't get your W-2 at the end of the year, you could just look at your pay stub.
So what I should have said,
that's what it was.
And if you don't get a paper pay stub, you should log into your employee portal and you should download it and print it out so that you have the figures for how much tax was withheld, et cetera, et cetera,
well, it's kind of a super fun debate, and apparently people liked it because they called in and said hello, and they gave us their 2 cents. And if you're listening on a podcast, we realize it probably sucks, but it's fine. Because
the best part was that we had people live call in.
Yeah.
And
it's a live show.
And live on Facebook Live who gave us their opinions.
Yep. So if you're listening via podcast, we know you probably don't appreciate the banter, but we hope you're having fun anyway listening.
So we have just a few more minutes left in this segment, and we want to talk about 6 tax tips for the self-employed. But first I need to explain the difference, or the 2 different kinds of self-employed taxpayers. They're primarily sole proprietors or independent contractors. And it's kind of a distinction, again, without a difference, right? So a sole proprietorship is like
one-man show.
Eddie decides he's going to open a plumbing business, and it's Eddie's Plumbing, right? He doesn't incorporate. There's no other
LLCs
formalities, none of that stuff. It's just Eddie's Plumbing. It's Eddie Smith doing business as Eddie's Plumbing. Okay, so that would be technically a sole proprietor. An independent contractor is slightly different. Independent contractor is oftentimes a guy who really has one gig, but his main income source chooses to pay him as an independent contractor. Does that make sense?
Yes.
So let me give you an idea. So Eddie is still a plumber, but Eddie doesn't do business as Eddie's Plumbing. Eddie does all of his plumbing work during the day he might do some for Joe's Plumbing and some for John's Plumbing, but he's not an employee of either. So he gets 1099s from those 2.
Right.
Those
so the
2
bulk of his
sources.
business comes from those people, but.
Right. Versus the sole proprietor would not get a 1099 probably from anyone because he's just taking cash or credit cards or checks or whatever from his customers. So that's the big difference.
And estimated taxes, that's a big thing. That's how a lot of people get in this pickle, right? They come see you later.
Yeah, so typically you're going to want to make your estimated tax payments, and we talk about this on the show all the time, literally all the time. And you want to go ahead and make those estimated tax payments more frequently than the government typically requires you to do so. The government just wants you to pay those quarterly. And this is what doesn't make any sense in my mind as somebody who deals with this every single day. Is as human beings, we don't budget on a quarterly basis. We just don't do it. It's not the way our mind works. For whatever reason, we budget either on a weekly basis or a monthly basis, typically monthly, right? But, the government says, but we want you to pay us every 3 months. And that's what gets people all tied up in knots. Let me give you an example. If your estimated tax burden was $3,000 a quarter, which would be $12,000 a year, right? Then that's $1,000 a month. It's pretty simple math. $1,000 a month is a lot easier pill to swallow for most people than $3,000 a quarter. Because what they're going to do is they're going to wait till day 85 in a 90-day cycle, and they're going to start thinking about this $3,000. It's not going to be in the account, and then they're going to they're going to panic, and then they're going to intend to pay it, and they're just not going to pay it, and then they're going to fall farther and farther behind. So my advice is to pay those estimated tax payments more frequently than not. So pay them every week or pay them every month.
Whenever you get paid.
Yeah, that's another great thing, especially for real estate agents.
That's how I changed mine. That's what I did. So I pay myself a salary once a month, and when I get paid, I make those tax payments.
And it's working for you, right?
Keeps it simple.
How long have you been doing that?
For several years now.
Yeah, so and every year you probably owe a little bit of tax, but it's not catastrophic, and it's like really not a big deal. And some years it's like, oops, I overpaid by $1,000,
right?
And you get a $1,000 tax refund. And you do a little happy dance on that day, and you probably just roll it over into next year anyway.
It sure beats writing a check. But,
it beats those years when it's like, whoops, I owe $50,000. Now what? Yeah. I've had that happen to me, and I know better. So I'm truly, I understand. I understand people's pain because I've lived it.
I don't know. It's just something about owing the IRS. It just makes me like, yeah.
The next thing that we want to make sure is that the self-employed people uses the Schedule C or the Schedule C Easy.
What's the difference?
The Schedule C Easy is for people who have less income. I believe they have expenses less than $5,000 total. They can use the Schedule C Easy. It's probably audited less as well because there's just not that much to audit, right? The other thing is that self-employed people need to use Schedule SE. They need to pay their self-employment tax. A lot of people say, well, what in the world is self-employment tax? That doesn't sound fair. It's because it's not. It's basically, basically when you're self-employed, you get to pay both halves of the Social Security. So for the employees who are listening, your employer pays half of your Social Security and Medicare. So they pay about 7.65%. You pay the other 7.65%. And for our self-employed friends that are driving around in their contractor trucks right now,
all of it,
they get to pay 15.3%. And that's one of the reasons why we have a lot of people incorporate. Too much to go into right now, but if they incorporate, they get to recapture some of that money. The other thing that we want to make sure is that if you're self-employed, you want to make sure you take all of your allowable deductions. Taxpayers can deduct expenses paid to run a business that are both ordinary and necessary. An ordinary expense is one that's common and accepted in the industry, and a necessary expense is one that is helpful and proper for a trade or business.
And we've debated this as to ordinary versus necessary.
Well, it's just, there's a lot of industries that are really, really different or,
niched.
Yeah.
Right?
I'll give you an example. I represent a construction guy who builds new homes. The new homes are just out in the middle of nowhere. And instead of giving his guys an hour for lunch or half an hour for lunch, because they're so far from everything, they all pile in the truck, they all go to McDonald's, and the owner just pays for them to have lunch at McDonald's. In this audit, the auditor didn't have a problem with it once I explained, no, this is how he makes sure that they don't, they come back.
They're not gone for 2 hours for lunch.
So the $5 for lunch every day is really not that big a deal. But I tell you, when he showed me the McDonald's receipts, and those were on the tax return, I kind of gulped. I was like,
oh man.
I'm like, uh-oh. But then once I heard the explanation, I'm like, okay, I get it.
But see, that's
cool.
the bottom. Like, if it makes sense, most of the time they're going to allow it.
Yeah, I think that's an ordinary and necessary expense instead of the IRS.
So another example, and I know you're probably going to hate this, but like, for example, let's say you're a real estate agent and all you sell is waterfront property. You may be allowed to take that boat deduction.
You may.
Right?
You may.
See, he loves how I push the envelope.
And then how much of a boat, right? Do you need the $500,000 boat,
Probably
or can you have a
not.
John boat?
Well, I don't know about that.
The answer's probably right in the middle.
Well, if you're selling a waterfront property, chances are your client's not going to want to go out in a little John boat.
No, they're going to want nice seating.
A little bit nicer,
refreshments and all that kind of thing.
Don't you love how I push the envelope? You're listening to the IRS Solution Attorney Show. We had a lot of fun with you. Thank you guys for listening. Thanks for the ones that called in.
Yeah, we had a great time, and it was a fun show, I think.
It was. Thank you. We'll be back same time, same place next week. We'll be back tomorrow with Tampa Home Talk with Corey Richardson.
Don't forget the toll-free number at the office is 888-GET-MISH, 888-438-6474. Visit the website at getirshelp.com.